Zero DTE, often called the impulsive trade or by many, gambling, not investing. Now, this can be true, but I've heard there are strategies that can make zero DTE very profitable. I wanted to find out if trading zero DTE can be effective. I studied legendary investors from Paul Tudor to John Carter, along with many others, to see if there was a strategy that I could use. I spent hours, days, weeks researching, and one thing kept coming up: volume profile, distribution curves, and trading with data. Many legendary traders kept saying this could be a helpful tool. I wanted to learn more from a source I knew I could trust. I called up someone who I thought might have the answers. This is Dr. Jim. He's been trading for 13 years and has seen zero DTEs come to life. How do you approach, or how have you perceived the zero DTE option trading saga that's been blowing up over the past few years, and what should traders be looking out for?
So when it comes to zero DTE, just to kind of, bifurcate their discussion a little bit, you have short premium and long premium, right? I'm going to totally eliminate short premium from my own viewpoint. I don't think it makes a lot of sense. You're missing out on so much theta in the first half of the cycle, 45 days to go, all the stuff that we talk about on the network. So now, if we're talking about zero DTE, in my world, we're only talking about long premium trades as a possibility. So this is where, you're buying spreads, you're buying calls, you're buying puts, you're buying butterflies, whatever it might be.
I feel like, especially on social media, we have an influx of information. We have an influx of traders, a lot of great market participants in the market. Some people are advocating for stop losses. Some people are not advocating for stop losses. Why do you think there's such a huge advocacy for stop losses and risk management?
So I think, and my own experience has been, well, wait a minute, what if I kind of just break this down to the brass tacks and forget about all that stuff and kind of build this thing up from a blank slate? And what I have found in my own experiences is that getting rid of stops has allowed me to be a lot more successful with the directional trades. Again, I'm being very honest. I don't use them. They don't make a lot of sense to me. But you have to understand what you're signing up for, right? You have to be very clear on what you're signing up for. If you're not ready to take 800 points of heat in the NASDAQ, then I wouldn't necessarily sign up for this, because it's not gonna jive. You're gonna be squaring a circle, and you're gonna be very surprised, because it's not a question of if, it's a question of when.
What would you say to a trader, that wants to trade a little bit more directional? Is that something they got to stay away from if they're not going to be able to endure that drawdown on something like a micro with VIX sitting at such a high level? What would be your take on that? Somebody getting into the market, they already have a small account. I can't endure all that drawdown. What would you say to them?
So number one, I know you typically like to trade the NASDAQ. That's a great product. But man, one micro in MNQ, that can really move. And so don't ever forget though, there's M2K. You could start doing micros in the Russell, which is a much smaller product. It is like a minuscule product. And so first of all, never forget that there's usually another product that you could go to shrink your size down even more. So if MNQ is a little bit too big, do MES. MES is smaller than MNQ. If MES is a little bit too big, go to M2K. M2K is smaller than both of those by multiples. And so that's one way to think about sizing if you want to get into futures, micros, whatever. But then secondly, you just have to understand, if you're working with less than $10,000, it just might not be, you might not be there yet. You might need some more capital, and it just might not be your time to do it if you want to try no stops. Now, maybe you go with the stops and you kind of go with the conventional wisdom. Again, I think you could have some success that way too. It just never really made sense to me personally.
100%. I got to ask, would you trade the futures directionally or zero DTE options directionally?
It's going to be largely up to the trader. If you were not going to use a stop loss, what are you going to have to be prepared for when it comes to futures or zero DTE? Number one, I like the futures a lot more than zero DTE because it is a lot cleaner. The delta is 1 for 1. And, the zero DTEs can be nice with the long premiums and whatever, but you're going to get whatever you want to get, that you want out of a long premium zero DTE trade that's directional. You can find that in the futures. If you're not going to use stops, then I strongly encourage you to only trade the indexes. Because if you're going in with individual stocks, this is where you get a takeover bid. That thing doubles overnight. That's going to be really, really difficult. So just to be really clear, if you are going to entertain the idea of not using stops, I would not do that with individual stocks. There's too much idiosyncratic risk there that you'll never see coming. Whereas with the indexes, it can still be pretty dicey, but still, we're not talking, the S&Ps are not going to double overnight. That's not going to happen. The S&Ps are not going to drop 50% overnight. That's not going to happen. We have to deal with, 3%, 5%, 7% moves with extreme outliers, but that's typically about as bad as it gets.
I'm gonna take some of Dr. Jim's insights and implement them into a live trade. Something I'm gonna keep top of mind is, does the potential profit justify the risk on this trade? Dr. Jim isn't a huge fan of using stop losses, but it's something that I wanna incorporate into my trading just because when you're using a small account, I really have to focus on my risk, and using a stop loss helps me do just that. Right now, I'm marking off the high of the volume that was traded all of yesterday and all of today. So this is where most of that volume is traded. This is the value area high. So this is the edge of the one standard deviation of trading activity that occurred all from yesterday and today combined. So because this is a value area high, distribution curves come with probabilities and statistics. So whenever we start trading at these price levels, if we start to get a lot of weakness, a lot of rejection, I'm going to be trading the edges of those extremes. So with the volume profile, it'll give you a more of a visual picture on exactly what that looks like. But that's pretty much what I'm trading right here. And I'm going to look to utilize the 0 DTE options to do that. So I'd be looking to buy some at the money puts if we start to get a lot of rejection at this value area high here, but we're going to watch it. We'll be patient. 0 DTEs, you need those to work in your favor fairly quickly. So you need that directional move in the market because time is an element. Price is the value of an option. So if you were to be trading futures, you wouldn't have to worry about that time element. But when trading 0 DTEs, that's something that you have to have in mind. Whenever you're trading these, you just need that directional move in the market in a timely manner because you need it to be within a time window. So we'll see if we start to get a little bit more weakness at these levels. We may buy about 5 contracts and then we could buy another 5 to size in. And then whenever we do that, we're going to watch the actual value of the put options themselves. So if we were to be buying put options right now, they're going for about 80 cents a contract. If we right click in between the bid and the ask, we can see the price fluctuations of the option contracts themselves. So if we were to be buying the puts, we'd be expecting the value of these puts to go up if the market was going down, right? And if we were to buy calls, we would expect the value of the calls to go down if the market is going down. So we're going to be looking at the puts in this situation. We are trading right near that value area high, which is again, the price extremes that we're trading in terms of trading activity. And we get these levels from using a volume profile, which is volume profile is just a distribution of volume. So we can see we're trading at these levels. We can even look to maybe get short on one of the contracts first. We'll wait for a better price to get filled on the put options. See, we get filled here, and we're going to be looking to getting more of a rejection. Hopefully we get a retest of this value area high so we can enter these 0 DTE puts. Because right now we have one contract in on these micros on NASDAQ. And we're going to actually start to enter about 5 of the puts here. If we get a retest, we'll add at a better price. We are trading at that value area high. So what we're going to do is we're going to go to the options chain, click on the 0 DTE. So you can see over here in the middle of the strike, it says 0 days. This will be the 0 DTEs, and I can go ahead and buy the puts. I can go ahead and do about 5. In the meantime, I can check out what the price is doing. Would love to get in on a little bit of a bounce, but we can start to get short here because maybe we just had lower. But at least we're in over here on the micros. See if we can get filled over here. It's a lot of negative delta. So we got filled just 5 of the contracts. You can see when we were looking at them, originally they were trading at about for 81 cents. Now they're trading at about $1.09. So they've already went up, 20 cents a contract. So you can see how volatile these moves are here. NASDAQ, these micros over here, see how that's doing. See we're selling off pretty well over here, trading that value area high, getting a lot of rejection at those levels. Gonna start looking to scale out down here at these lows if we can take them out. We've been rallying all morning too, off of a lot of good news. You could have had maybe trending strategies, but now whenever we're trading reversals or mean reversion strategies, we have to wait for the extremes. So now finally, 2 hours before the close, we're getting a little bit more of an extreme in terms of direction because we've been moving to the upside all day off of tariff news, off of good CPI an hour before the bell this morning, which inflation came in at 2.3%. Well, that's a positive outlook, especially with all of the tariff shenanigans going on right now. To see that inflation is cooling off a little bit is a good sign. And we're still getting short. With all of those bullish fundamentals, we're still getting short. That just kind of shows you the reality of trading sometimes. You can have bullish fundamentals, and when you're trading in a smaller time frame, you could be eyeing a short opportunity. When in the big picture, we might be bullish. We might have bullish fundamentals, but the technicals are setting up for a short-term bearish move, or vice versa. That's just the reality of trading sometimes too. Let's take a look at these put options. So we can see the put options are up about 65 right now. The micros are up about the same price. We're up a little bit more on the 0 DTEs. Market's still selling off a little bit more here. We didn't get the best place to add on this position, so we didn't get to add the other 5 contracts, but we'll still see. You can still get a good bang for your buck, right? 5 contracts at $1.03. It's about that's about $500 of buying power, right? We were going to add another 5 contracts if we can get a good price, but right now the market's selling off as to why the put options are going up, and we don't want to chase price. We're not going to do that, but maybe these options go up to even these highs over here at $1.41. That'd be almost about a 50% of return on your capital, just under that. But maybe we get an opportunity to add because we're pulling back a little bit here now. So we'll have this ready. Do another 5. You know, we're going to change the color of this value area high so it stands out and lets us know it's an important level. Okay, we can go with like green, like a dark green, forest green. See, we're still selling off here down to these lows. I want to take off the put options if we get down to these lows, and we can keep on. So we're about 120 on these, still coming near these lows over here on NASDAQ. We're really selling off right now. If we can get this to load, we can look to start covering some of those 0 DTE puts. You can see we're up almost a couple $100 on those ones. So we're going to look to start closing those. We didn't get an add on that one. That's unfortunate, but we'll see if we can get a fill, get out of these contracts before we pop back up. I'm a little bit more proactive on managing the trades with put options, especially over the micro NASDAQ futures, because we're not dealing with time. Time isn't nipping away at the value of our position when we're trading the micros. So with the put options, when we get that directional move, I don't want to play any games. I don't want us to start consolidating and then we lose time value and then still get the directional move, and then I get stopped out of the position. So I want to be a little bit more proactive because I know time is an element at play with this position size. See if we can get filled here, pulling back a little bit. We're going to sit in our NASDAQ position a little bit longer here. And then hopefully we can get filled soon on these QQQ puts. Go back over here, and again, to do that, you just go in between the bid and the ask, right click, and then it'll load up that actual contracts themselves. So whichever ones you're trading, whichever ones you're entering, this will give you a better visual on how to actually manage your trade too. So you can see your fill price for the contracts that you got in, and you can see I have a limit order working to take me out of that position whenever we trade at these price levels again. You can see just about, 5 minutes ago, we were talking about how we were going to look for the put options for the value of these to trade up at these highs, and you can see how quickly, just in 5 minutes, when the market moves, the 0 DTE contracts can definitely move. See if we can at least put in a new low. If we can put back in this low, be able to get filled on those put contracts. And then if we put in a new low, we'll look to exit these futures contracts at the same time. There we go. Putting in some newer lows. Looks like we just got filled on the QQQ contracts. So if we go back over here, I believe we were trading. No, we weren't trading these ones. You can see we got filled to get about 175 just off of those 5 contracts. And then we're still sitting in those micro contracts. That was the 517 puts. So if we come back over here, we can get another visual for how quickly these premiums really move. I mean, the 0 DTE contracts, if you're trading these directionally, it's great to have in mind where you're looking to get out of the position and how you're just looking to manage the overall position, just because of how quickly these premiums can shift. So if you see a short-term movements in the market that you want to take advantage of, you can use the 0 DTE options. Just make sure you size them correctly. And if you're practicing sizing them, just make sure you're able for them to go to 0. So size them correctly on position size if you're just getting used to them and learning how to really manage risk in the markets. I still have on these micro NASDAQ contracts, and the market is still continuing to sell off, and we're going to start looking to exit this position here. And as you can see here, I can give the futures a little bit more time to work just because time isn't a factor, right? Time isn't going to be deciding factor in terms of the timing on exit on these positions, just because time isn't going to eat away at the value of them. So we're going to start looking to close this position here. We're going to start taking this one off. But one thing I want to point out is you can see that I caught a larger directional move using the futures contracts, right? And I made about $100 on that one, and we made more using the 0 DTE options, and we were using only about $500 worth of buying power, right? With the futures contract, the buying power is going to be, you're going to see here it was $3,300, right? $3,300 made $100 instead of, I just made 175 using the 5 put contracts, only using $500 worth of buying power. It's really situational. If this is a good situation to utilize the 0 DTE put contracts, maybe you can do that. If you're a little bit more unsure of the timing of the move that you want and you don't really have a time window, feel a little bit more comfortable using the futures contracts because time isn't going to be a factor in your decision making in terms of getting out of the trade.